Hello, everybody. I'm Toby Gennaro, and got a smaller crowd on today, but that's good. We'll get some Q&A going. Let's do a sound check real quick, as we normally do. Make sure technology is working all right. If you guys that are already logged in, if you could just shoot me over an electronic high five, let me know that you can see the current splash screen. It says live technical analysis. This is the Market Movers meetup every Tuesday. So if that's working out for you, just let me know. Thanks, guys. Thanks for doing that. Looks like we're good on the technology. So we'll get the recording started here. I'll do a little formal introduction for recording purposes, and then we'll jump right to the content. Hello, everybody, and welcome. I'm Toby Gennaro, and I will be your presenter for today. The topic for today is live technical analysis, and so I'm going to be talking through, just a series of specific trade setups that I'm seeing in real time in the markets according to the charts. For those of you that are on the live webinar, if you have any questions during the session, please do type those into the question box on your screen. I'll be asking you guys some questions as well. The whole idea of this session every Tuesday is to make it very interactive. So you've got about 30 minutes to do that. So be ready to interact. And we'll just put up the risk warning and disclaimers as we normally do. Got to do that as part of the business. Leave this up for about 30 seconds or so. If you guys could just have a quick read through, that would be good. What this is saying in brief is that we provide education only, which means we do not give any financial advice. And as most of you know, trading the markets can be risky. It is not suitable for everyone, and you should seek independent professional advice. All right, everybody okay with that? And just one more disclaimer here from Nadex. You can have a quick read through this one. It's a short one, and then we'll get straight to the content. All right, so let's jump in without any further ado. So to kickstart your trading every Tuesday morning, you can utilize this regular feature here from the trading team at Trade with Precision. And with so much going on in the markets each and every week, how is it that we can spot opportunities across multiple markets, multiple time frames? So you can join us weekly for this very insightful webinar, where we'll focus on some technical and trend analysis across major markets to help answer that question. So let's go ahead and jump into some of the live charts. We'll see what kind of trading opportunities we can find for today and move in that direction. So I took a look at a couple of charts ahead of time that I thought would be good to consider for potential trading opportunities. So let's go ahead and take a look at those. One is going to be the S&P 500. We're in the middle of earnings season, so there's been a lot of activity there. And then the dollar yen is another one on the higher time frames, but at least that gives us some guide on the lower time frames as to what the overall direction is. And then really we can just focus on looking at some of those smaller time frames to trade in the direction of the higher time frames. That's normally the way that I do it. So let me do this. Let me get my screens set up here so you guys can see everything. And just make sure that that I have everything. We got the Nadex charts, and we've got the screens for the ES contracts, the S&P 500. We'll be looking at the Nadex contracts related to those US 500 contracts for this particular view of the charts. So getting into this real quick, I always start out at the higher time frames, as you guys know, if you're a regular attendee of these sessions. So monthly, weekly might seem a little high for the Nadex contracts, but what I want to do is I want to do a top-down analysis, get an understanding of really where the market's headed, where it's been, and this is really the best way I find to do this, is to look at the long term. If we can always trade within the longer term direction of the markets, then that gives us the best opportunity to trade with the momentum. If we just looking at the lower time frames, then it's very easy to all of a sudden be trading short just because the charts are trending down when the higher time frames like this are obviously in an uptrend. So what I like to look at is I'm always looking at the overextension from the moving averages. As most of you know, we line up our charts with 4 moving averages: the 200, the 50, the 20, and the 10. And every time we get pullbacks into this 10-20 period moving average zone, that usually indicates for us continuation going forward. So you get these pullbacks and you get these bullish candles setting up in what we call the buy zone, and then at the break of high of that candle, you get the next move up. So you can see this happening many times, and even though this is the monthly chart, it happens basically on every single time frame, including the weekly. So I've got some nice setups right here, nice rejection candles, nice bullish candles in and around here, and as soon as they set up, then the market just kind of takes off, and sometimes doesn't pull back for quite a while. So we get these short pullbacks of 4, 5, or 6 candles, and then we get a run of like 6 to 10 candles is really kind of the idea, and you can see it happening all the way back here, in and amongst here, and all of that. So that's really most of them of what we're looking at. Now we're also getting these consolidations here, like this flat level that you see right here. We've got 4 weeks where we're pushing up on that level right around 29.20. And that looks to me, the moving averages are catching up to the price. It's looking to me like we're going to be set up for a breakout. If we close out this week with a nice rejection candle right there, like you're seeing, that's going to be pretty positive for an overall breakout. And when these things break out, they can run for another several weeks. So some caution there. We are in the middle of earnings season, so always want to exercise some caution. Nadex contracts are great for that because we don't have to utilize stop loss, because the stop loss is basically built in to the contract itself. So we're protected in that regard. So on the higher time frames, we're looking good as far as the momentum and a potential continuation. We do have some slight divergence, some pretty good divergence here, but it's only one divergence bump. It doesn't mean a whole lot until I really see like 2 or 3 divergence legs, and simply meaning that we're putting in a higher high in price and we don't have a higher high on the indicators. So that means that the indicators are diverging from the price action. So as you can see here, when we get continuous higher highs on price, we want to see those continuous higher highs on the indicators, the MACD and the RSI. That's basically how we set up those charts with those 6 indicators, the MACD, the RSI, and then the moving averages. So as we move down through the time frames, you can see here, just had a pullback into that moving average zone, nice bullish candle. We took off there again. We've got that little bit of a consolidation here for the last couple of days, a little bit of a pullback, another bullish candle right in that buy zone, all the moving averages fanning out to the upside, higher highs, higher lows on the price action, nice small candles throughout the price action, good trend there, good angle to the price action. And then here looking at this, we had this pullback all the way back here, really nice rejection candle, break of the high, and we just took off. So we're pretty well and good into this 8-hour chart move on this setup right here, but we're just getting the setup candle here on the daily chart, which is good. So you're going to find as you look through the time frames for these setups, you'll find that some of them are already set up on the smaller time frames and moved, but then you can just move up to the next higher time frame and see what's going on there to see if you can find a setup potentially on another time frame. And so we'll look at 2 different charts side by side, like the 2-hour and the 4-hour, get our setup there, and then move forward. Here, we don't have anything happening on either one of these. We're a little bit overextended from the moving averages, and as we move down through the charts, you can see that overextension. What we're looking for right now is really a pullback on some of these smaller time frames into that moving average zone if you're interested in trading, the 5 and the 15-minute charts. So we'd be looking for a pullback into, some of these levels right around here, 29.06, something like that. We can draw a Fibonacci retracement between the swing low and the swing high, and that'll bring us probably somewhere in and around that 29.05 level, 29.06, put us right around that buy zone. That's typically what happens. Here on the 5-minute chart, same thing. If you get a pullback, it's going to be a little higher, maybe into that 29.10 area, somewhere around there. Obviously, we haven't had a pullback here in a while, at least for the last couple of hours, which obviously things tend to happen a lot sooner on the 5-minute chart. But here we've got nice continuation, nice convergence, higher highs in the price action, higher highs on the indicators as well. Same thing here on the 15-minute chart. So at least we have the higher time frame direction, and that means we can now look for those pullbacks on any of the lower time frames. And as you can see, some of them are going to be better than others. I wouldn't be looking at the 30 and the 60 minute until we got a pullback into that 2900 level. And so those are just some of the things based on that trade strategy that we're looking at here. A little overextended on the 2 hour and the 4 hour as well. Again, you can see that daily chart. I'm very interested in seeing how that sets up by the end of today. If the market closes out bullish with this candle, then tomorrow morning I'll be looking for the break of the high of that candle and looking for the move higher. So the next higher move would be somewhere around the previous high, around 29.23, and potentially breaking out to a new higher high. And that's kind of what things are looking like on the S&P 500. Any questions that you guys have about some of these charts and what we're looking at? This is called the trend flow trade strategy, where we're looking for the pullbacks into the buy zone, looking for those setup candles on flat level breaks. Like what you're seeing right here, that's going to be the momentum breakout strategy. So we're looking for breakouts of horizontal flat levels to explode higher. And so that's what we're looking and we're seeing right here, accumulating with a number of smaller candles here, pushing up against that level up around, basically 29.20 and looking for a break, another break higher. So with that said, we'll be talking a little bit more at the end of the session about how you can learn more about these two trading strategies. Nadex offers a 6-hour course over 3 weeks where we'll show you the ins and outs of these two trade strategies, show you how to read price action just like I've been doing and demonstrating here. And you guys learn to do this for yourself and hopefully take your trading to the next level. Okay. So let's take a look at the Nadex. We're right around that 29.20 level, currently sitting right around 29.16. Let's take a look at some of the longer time frames. We've got a couple of days left in the week here till Friday. So there's 24-hour contracts like on the daily. This one has obviously only 4 hours left in the session. But once the daily candle closes, then you'll get the new one set up this afternoon where we'll have 24 hours on them. On this one, I'd probably prefer to look more at the weekly, give myself a couple of days. Since the candle just set up on the daily chart, I'd like to give myself at least 3 candles of daily activity to see where this thing can potentially get to. Obviously, we're having earnings releases, before the open and after the close of every session, which means a lot can happen in the after hours, and so we always want to be aware of that and give ourselves a little bit more time on some of these. So 29.20, we have 29.18, which is probably going to be a decent one to look at. So here going long, we can get at least a 1-to-1, which we're always looking for. It means we can buy it for 50 and potentially hold it until expiration and look to get 100 out of these. So basically we're risking $1 to make at least $1, if not $2 or $3 on a trade. This one is going to be a maximum 1-to-1 reward to risk. So that's going to be our minimum. And then here's another one at 29.30. That's actually creating a new high. So there's a little bit more risk introduced to that one, but for the additional risk, you get to buy it for $20 less. So it's $30. We're looking for basically a 3-to-1 reward to risk, basically buying it at 30 and looking to dump some at 60, some at 90, and potentially some at 100 if it gets to that level. And then obviously the farther out you go, the cheaper it gets. But once you get out to 29.42, the market's really going to have to make a pretty good stretch in the next 3 days. I mean, that's not that far. About another 20, 25 points in the S&P over 3 days. That's not a lot at all. But if it doesn't get there, then these are going to go to zero, pretty quickly. So those are really the 3 options for, for looking at this particular opportunity in this setup, provided that we get that bullish candle on the daily chart. So let's take a look at one last set of charts here. We'll take a look at the dollar yen. and see what that looks like in terms of the technicals. And so again, looking from the top down here, you can see we've been pretty sideways here for quite a while since we got this pullback 2 years back in the middle of 2016. Made a little bit of a run up, and then all of a sudden kind of settled in here, and we've actually been making a lower high, a lower low, and we're dependent on whether this is going to be a lower high or whether we're seeing a move here to break up higher. We still have all the candles in a very bullish formation. If we start to get a breakup, they're all going to start fanning again. And then the next stop would be getting through this key level right here around 114. And then the next level would be up around that 118. So here, when I'm going down through the time frames, I want to see really what things are doing. We've got some higher lows and higher highs here on the weekly chart. This is the most recent higher high. We put in a new higher low right here. We've broken the high of that candle. All the moving averages are fanning out. A couple of nice bullish candles here in the last couple of weeks. Looks like we're going to be making a pretty clean move, I think, up around past that high at 113 and then making a move back up into that flat level around 114, which should provide more than likely some pretty solid resistance. I'd look to see an accumulation of price action around 114 and then reread the charts and see potentially where things are headed at that point. If we're looking to make a move back up and retest that high at 118, or if the markets reject that level. So we'll just take it one step at a time as we look through those. Moving down to the daily chart and the 8-hour, take a look at those. We've got some higher highs, higher low, another higher high here. Just set up a bullish candle right there in and around the moving average zone. Had a little larger bullish candle there, another bullish candle, a couple of nice bullish rejection candles right there that kind of got this thing started. And then really we've been on a move here for the last week and a half to the upside, all the way from 110 to the current level at 112. So we've currently put in a new higher high. Things are looking pretty good as we go down to the lower time frames. You start to see the direction of the higher highs, higher lows. You start to get the fanning out of the moving averages really nice. A little bit of overextension there, but not too bad. Nice convergence on the indicators. So things are looking pretty good there for a continuation higher. And then here on the 4-hour, we start to get a little bit of divergence, even a little bit more of the first leg of divergence here on the 2-hour. But since we have some good looks on the higher time frames, I'm not going to be too worried about that until I see a second and a third leg of divergence, and then we get some, start to get some lower highs on the indicators. Then that will tell me that more than likely we're due for a pullback. But at this point, I think the markets are looking to make a move here in the direction of the higher time frame trend. We just need to be able to find a pullback structure that works according to our strategies. So I like the 60-minute chart. If we can get a pullback here, then I can look at this nice level right in around 112, puts me right in the middle of that buy zone, right around the 10 and the 20 period moving average. And then I've also got a number of levels of resistance right there that should now become support, and we get right back into the buy zone, bounce off of that key level right there. And let me get a level in there so you guys can see that a little bit better. There you go. So that level comes in there and it fits right in the middle of there. So if we do get a pullback, then that'll be just another technical factor that will give price a chance to bounce off. If I were to put a Fibonacci retracement in there as well, I'll just show you a couple of things here. Draw it from the swing low to the swing high. You can see that a pullback off of this level puts us right back in the sweet spot between the 50 and the 62% level, and that couples with that historic price action level there as well. So all of a sudden we got a number of things. We've got a pullback, prices in the buy zone, we're up against a solid level, we're in the sweet spot between that 50 and 62% level on a Fibonacci retracement. So that's all good. We can draw another Fibonacci retracement between the next lower the swing low to the most recent swing high and see if anything else aligns. That brings the 52% level right in along here. And I'll just get another line in there for you guys so you can see that. So all of a sudden, by putting a couple of fibs in there and get a couple of levels in there with price action, we can all of a sudden see where all these levels come into play and how they all interact. Ideally, I would like to see the 50 overlap with the 62 or the 50% here, but we're not getting that, and then continue to overlap with that line. But it's giving us more of a zone. It's pretty close. It's right around that 112 level. So we could see the market, if it does pull back into this zone, maybe dip a little bit below the 62% level, put in a rejection candle there right in and around that, that buy zone. And then that's how we would define then our setup. So not only can we look for the pullback and the candle in the zone, but there are a whole host of other things that we can get set up in looking at all the technicals. These are all the things that we'll show you in that Nadex advanced course. If you guys are interested in taking that, it doesn't cost you anything. Just need to have an account with Nadex, and it's complete complements of Nadex to do that. I'll talk about that a little bit at the end of the session. So that could be a nice setup right there. On the other hand, the market could continue to shoot up because the higher time frames are looking that way. But sometimes you'll get these pullbacks, and you're only going to know that you get a pullback is if you identify it and wait for it. And so that's what we're looking. We're waiting for the market to come to us. We're not looking to chase the markets when we have overextension like this, because when price is overextended from the moving average, then we can anticipate a snap back to the moving average, and that's why the average is the average. Okay, so here we're looking for a similar type thing. We've got that level right in around here at that 112. And so if we get a pullback on the 60, then we can look at the 30-minute, or we can go to the next higher one, look at the 120-minute, and see where we get two side-by-side time frames in the buy zone between the 10 and the 20, and then look for that move. So as we go down, a lot of you guys are probably interested in trading some of the shorter time frames. As you can see, the 5-minute, we're still in alignment, but it looks like the averages are almost looking to cross over. We have a lower high, lower low, lower high. So we don't know where that's at this point. Here we're back in the buy zone on the 15-minute. So we do have a bullish candle right there, but we don't have a bullish candle on two side-by-side time frames. If we get this one closing out here, there might be a possibility of a run-up going into the close today. And this would be a very short time frame, 5 and 15 minutes. So you might be in that trade for just a couple of candles, maybe an hour or so. But you got to wait for that candle to close out, because as you see, it went from bullish to bearish. So you don't want to get in ahead of the signal. These candles have to close out. They've got to be nice and green and small and bullish. And since we've already gotten a false move right here, I'm not necessarily inclined to trust the 5-minute chart, because we don't have higher highs and higher lows. We actually have a lower high and a lower low. So until price breaks this level here, we're not going to be setting up a trend of higher highs and higher lows again. On the 15-minute chart, we don't really have any of the lower highs and lower lows. It's just a pullback into the buy zone. We're still setting up a higher low right here, but that remains to be seen. So we've gotten a break of that candle, but we still want to see that. More than likely, I think the pullback is going to be on the 30 and the 60-minute, if not maybe a little deeper pullback. Doesn't really look like a pullback on the 120, but I think probably the 60 and the 30 is going to be the closest and the nearest pullback that we've seen. I think this is probably the best chart to diagram this on, like I've already done. So that's kind of what I'm thinking about. If we look at these levels, 112, somewhere around there, if we go to the Nadex charts, looking at, let's take a look at some of these to see where they stack up. The 14-hour, we're looking at a 60-minute chart. We probably only need, we're going to need to see a pullback. So 14 hours, 18 hours. 2 hours, let's see, 6 hours. Yeah, we start to look at maybe some of the 6-hour charts and see if we get a setup by then. We don't have a setup yet, so I'm just kind of speculating here, giving you guys some things to look at. 112.40, if it pulls back into that level, that would be a decent level to look at. That'd obviously be a little bit priced a little differently, but as long as they're less than $50 a contract, it still gives you the opportunity for a 1-to-1. That certainly looks like the case there. The 112.40, the 112.60. So a couple different options there. Even this one, the 112.20 on a pullback, that would probably get into the $50 range. So probably almost 2 or 3 contracts there that we could take a look at relative to the 6-hour time frame, and then there's a 10-hour time frame that we can look at. Probably a couple other ones, the 112, 20, 40, and 60. And as you can see, when we go back to the price action, we're right around that 112.20, 28 level. So we're looking to get back into, the 112.20, the 112.15 level. Even back into the 112.04 level. And that's just slightly below that level on the 62%, which is, see if I can get there, just right almost dead on that 112 level, which coincides with all the prior price support and resistance. So that's how I would go through and look at all of those different pricing scenarios, then finding the appropriate contracts to look at. Let me wrap up here real quick with a couple of things here on the premium trading strategy course I've been talking about that'll help you to understand exactly what we're doing on these sessions and help you to do some of this for yourself as well. So as we talk about that, this is going to be a 6-hour educational package. It's going to be presented by Trade with Precision over 3 weeks, 3 installments. So it'll be 3 2-hour sessions in 3 consecutive weeks. The trading team will be conducting these as live interactive webinars, just like today. You can log on, you can ask questions, have a dialogue with the trader presenter. We'll be working through various trading scenarios in real time and having you guys do a little homework online. And making sure that you understand all of the content, understand how to read market price action, understand all of the indicators that we're using, how to learn how to use leading indicators instead of lagging indicators, how to work with multiple time frames, support and resistance levels, all those types of things that I've been talking about today, and show you a whole package and 2 trading strategies that we use ourselves to trade our own money. And you can learn those for yourself as well. If you were to take this course directly from Nadex, it'd be valued at well over $900, but it is free to all Nadex members with a Nadex account. And so provided that you have an account, just get a call into the 800 number at Nadex, tell them you want to get signed up for the premium trading strategy course, and they'll check your credentials, get you locked and loaded for that, and you'll be ready to go. So join us for that if you're interested. It'll be over 3 weeks. We're doing it basically once a quarter. So it's only coming up 4 times a year. So it's coming up here, I think, in the next couple of weeks. Get a call into the 800 number and they'll tell you exactly what the dates are, and you can jump on board with that. And then just wrapping up here, the reason Nadex is doing all this, having a Tuesday sessions like this to keep you on top of the markets live in real time, and then with all the trading strategy education, Nadex is really just making an investment in your success as an investor and as their client, and that's why they sponsor events like these. So a couple different ways you guys can get in touch with us, phone and email listed here for any questions that you may have, or you can ask me your questions right now. Just use the question box on your screen. Demo accounts are available to provide you some familiarity with the contracts and what we've been talking about today. It's good to get that set up for yourself. You can see kind of how these Nadex contracts ebb and flow and move and how they're priced. For current members of Nadex, if you'd like to begin trading again and take advantage of that trading education course, just log in to nadex.com and hopefully we'll be able to help you take your trading to the next level. If you're new to Nadex and you'd like to set up an account, just go again to nadex.com. Click on the orange box. I believe it's in the top right. It says sign up. Fill in your details there. Someone from Nadex will respond via email to get you started. Before you sign off, there's a short survey upon your exit. Please let us know your thoughts and how we're doing. And if you have any questions, let me know. I'll stay on a little while longer here for a minute or two, answer any questions before we wrap up. If you are leaving us, appreciate you joining us for this Tuesday session. And let me take a look at my question box here and see if there are any questions for me. Thanks for the compliments, guys. Appreciate that. I'm glad you enjoyed the session. I don't have any other questions here for me, so if there's anything else, just type it in and I'll get a response to you here in the next couple of minutes. Is there anything else that you guys have questions about? Any of the content? Anything about the advanced course before we wrap up? All right. Well, I believe we're at the bottom of the hour. This is a 30-minute session on Tuesday morning, so I think we'll wrap it up at this point. So have a great rest of the week trading, and we'll look forward to talking to you next week. Take care.